Thanks for joining us on Parliament. This is Bloomberg Quint. I'm Harshas. We'll name the headlines at this hour. Markets start December series on a strong note, extending rally for the fifth straight day, led by gains in IT stocks. Housing finance companies gain after the Reserve Bank committee relaxes securitization norms. India's second quarter GDP is expected to grow at 7.5%, according to a Bloomberg poll. Numbers come out this evening. And world leaders, including India's Prime Minister, arrive at Buenos Aires for the G20 meeting. Donald Trump says the trade deal with China is not a given. Thanks for joining us. Quick check on how the markets are faring right now. Neeraj is here, as always, with a closer look.
We're off the highs of the day, Harsha. Good afternoon. And we were hoping for fifth straight day of gains for the index, but somehow it's not to be, though. We are marginally in the green even right now, so no complaints whatsoever. But the banks aren't quite participating. And frankly, it's got nothing to do with Yes Bank, because Yes Bank is actually doing rather well for itself in the session today. But the larger other banks, the HDFC Bank, the Kotak banks of the world, the heavyweights, just come off a little bit in the session today and putting that little bit of pressure on the Nifty Bank today. What's moving around? I think just taking a cursory look at the gainers and the losers, non-index, Oil India, ex-buybacks date. A lot of people are wondering what's happening there, but it's down about 6% because the date expired yesterday. So on 4 million shares traded, that stock is down about 6%. Vodafone Idea is down about 3 or 4%. So under some bit of pressure is Vodafone Idea in the session today as well. But a lot of broader market stocks, quite unlike what's happened in the last few days, are doing rather well. So ADAG, a clear sign of what the sentiment in the market is, and Reliance Power, Reliance Communication, Capital, etc. All of them have some decent moves. Reliance Communication in particular is up about 9.5% in trade. So really strong show. And NBFCs, essentially the center stage of all activity today, at least the housing finance companies, because of the RBI moves, have done well. Repco, when they spoke to us and in the market open, was just about 0.1%, 0.2%. It's currently up about 8%. Indiabulls Housing Finance a couple of percentage points higher. Divan Housing about 5 or 6% higher. So that whole NBFC housing finance space seems to be doing rather well for itself today.
Let's talk a little more about that. Neeraj, thank you so much for joining. The RBI has made yet another relaxation as it tries to free up liquidity for non-banking lenders. The regulator has reduced the holding period for secured loans that have originated from NBFCs with a tenor of at least 5 years. Ira is here to tell us what the implications are of this move. Ira.
So, Harsha, I think what they're trying to do is use securitization as a route to generate liquidity for these non-bank companies. Already, securitization was very strong in Q2. It was strong even in October. And they are now trying to give that a further boost. So, one rule for securitizing portfolios was that you have to hold the portfolio for a minimum of 12 months. The reason for that was that 12 months is a reasonable period over which you get a sense of asset quality in that portfolio. But it was preventing a sale of newer loans which had been generated, particularly by housing finance companies in the last 1 year. So they have reduced that period, holding period, from 12 months to 6 months. Although they have said this is a temporary relaxation, but what it will do is that the loans which had been originated in the very high growth period of last year, some of those will start to become eligible for securitization. So, that is one big relief point. In order to ensure that, bad portfolios are not just lumped on either banks or on mutual funds, they have increased the amount of portfolio that the NBFCs need to hold back. So earlier it was 10%, now it's 20%. So just to give you a very small example, if you had generated 1,000 crore in loans in the last 12 months, or at least, those that are 6 months old, you can now at least get 800 crore on that portfolio. You'll have to retain 200 crore, but you can at least generate liquidity for that 800 crore, assuming there is demand. So it is a significant relief point. There is some danger in this generally from a system point of view, because if asset quality was not good in these portfolios and they get lumped onto another part of the system, which is mutual funds or banks, then your problem is not entirely solved. But for NBFCs, this does come as a relief, particularly for housing finance companies, which is why we are seeing some of these guys, look stronger in trade today. Okay,
hold the thought. We're also going to be talking about the broader economy. The economy, which grew at a fast pace in the first quarter, may have already started to slow in the second. GDP growth may have slowed to 7.5%. That's according to a Bloomberg poll of economists. Remember, the last one was about 8.1%, 8.2%. Iraz, you've been watching out. What's the market expecting?
Okay, so the expectation is that slowdown in growth started in Q2. So you're expecting a GDP growth of about 7.5% if you go by the consensus of economists polled by Bloomberg. But there is a range there. Some people are expecting that this time around in Q2 you will still see a number closer to 7.7, 7.8%. But there will be slower growth compared to Q1, which everyone agreed was a bit of an aberration for a various set of reasons. On GVA growth, expectation is that you'll get a number close to 7.3 odd %. The slowdown will come partly from the industrial side, because manufacturing, which grew at 13% year-on-year in Q1, is likely to come down and moderate to about 7 to 8 odd percent. So there will be some slowdown coming in there. Farm sector is a bit of an outlier. Nobody actually manages to predict farm sector growth very accurately. But the expectation is that at least output-wise, farm sector was okay. So, farm sector growth may be fine, but nominal growth on the farm sector will be lower because of the price problems that we are seeing in the agricultural sector, which would mean that rural demand would have been soft in some parts at least of this quarter. That's on the agriculture and industrial side. Services is expected to remain reasonably strong. But I think the bigger question is what this number comes out to be, and then what the incremental hit in Q3 will be. Because remember, in Q2, you will not factor in the NBFC crisis and the impact of the NBFC crisis. It is only going to come in Q3, and then you'll probably see some rebound in Q4 if the crisis was just temporary. But this number will tell you where the rest of the year will go from here on in terms of growth. For now, everybody is expecting 7 to 7.5% for the full year. The optimists say it will be closer to the higher end of that range, and the pessimists are saying it may be 7.2, 7.3.
That's the GDP number for you. A number is expected later this evening. Ira, thank you so much. Let's move on. October also saw some moderation, and the monthly auto sales drop is only expected to increase in November. This despite being a festival month, remember. Yatin is here, and he's put together a poll of 3 brokerage houses to take us through what can be in store for automakers. Yatin, we spoke to the Dealers Association, talk about rising inventory. Yeah. What is reflecting in their studies?
So, Harsha, given the fact that the inventory is on the ground already very high, probably we could see a phase wherein the auto companies wholesale might get impacted because everybody wants to rationalize the inventory at this point in time. And this time, if you look at the commercial vehicle space or passenger vehicle segment, it is coming on a very high base, and probably because of that also we could see some decline in growth. However, the silver lining could be that the two-wheeler majors could see strong double-digit growth on the back of strong rural demand. But let's start with the passenger vehicle segment, wherein Maruti Suzuki is expected to show a decline of nearly 5% on a year-on-year basis on the back of slower retail sales in the festive season, and on an overall basis the demand has moderated. Not only that, for the commercial vehicle players like Tata Motors as well as Ashok Leyland, we are expecting a marginal decline to come in, simply to do with the fact that this time there is a liquidity issue with the NBFC segment, and the financing on the ground has been weaker than the market expectations, because of which the commercial vehicle demand has seen some slowdown. In fact, if you look at the two-wheeler space, as I was mentioning earlier, strong growth for both Bajaj Auto and the TVS Motor Group. Of course, the export markets will look buoyant for both of these players, because of which, again, the growth will be aided. Royal Enfield, remember the Chennai plant strike has ended, because of which the production would catch up. So we are expecting a 5% growth for the Royal Enfield business of Eicher Motors. And Hero MotoCorp, on the back of stronger rural demand, we could see a 3 to 4% kind of a growth range. As far as the agri segment is concerned, Escorts, we are expecting a double-digit growth of 11%. Remember, the management earlier spoke to Bloomberg Quint as to how the northern markets are quite buoyant. So that will be a key factor. M&M, again, we are expecting a 8% kind of a growth. And as far as Mahindra's automotive segment is concerned, on the back of strong new launches, product pipeline, and the new Marazzo, we could see a 14% kind of a volume growth.
Jatin, thank you for putting that in context. Let's move on. The government's new industrial policy will have a leasing option, allowing businesses to lease land and equipment on a long-term basis rather than having to buy it. This proposal is expected to be tabled before cabinet in the next couple of weeks. Archana Chaudhary of Bloomberg News spoke to the Secretary of Department of Industrial Policy and Promotion, Ramesh Abhishek, and asked him to list out some of the salient features likely in this policy.
We hope to take this policy to the cabinet in the next 2 or 3 weeks, I'm hoping. We have been working on it for quite some while, and it's a very detailed exercise that we have done. That's why it has taken more time than what we thought. But I think it's going to be a landmark policy. It will guide the central government and the states in making India a business-friendly destination. And that's very important, because if you are not competitive, then obviously the manufacturing or services, they will not be coming to India in the kind of manner that we want.
And finally, if I may ask you to speak to us also about the e-commerce policy, and by when can the market expect that to be in place? What's happening on that?
Right. This subject of e-commerce has come to DIPP recently in the last 1 month or so. We have a draft policy prepared by the Department of Commerce after a lot of consultations. So we are looking at that draft, and hopefully soon we will be going for interministerial consultations on the draft policy. And once that process is over, then we will go to the cabinet. So it's all work in progress.
All right. India is moving further away from the natural gas usage target set by the Modi government. The government targets a 15% share of natural gas in the energy mix by 2030. But after peaking just about 10%, it slid back to 6% this year. Rajesh Kumar Singh from Bloomberg News joins us from Delhi. Rajesh, can you explain to us what's really caused this fall?
Yeah, Harsha, this is the latest in a series of stories we have written on how India's, how natural gas is struggling to gain acceptance among India's energy users. And the reasons for that are several. There has been a sharp decline in domestic output, and India has had to import LNG, and LNG is obviously more expensive. Gas has not had the kind of policy push that it needs, and also there are some infrastructure bottlenecks. So that is a bad news for a country like India, which is battling air pollution in all its most of its cities, because natural gas is considered to be relatively cleaner fuel than, let's say, coal, which dominates our power mix, and diesel, which dominates our transport fuel mix. As a result, what we are seeing, the numbers have stagnated. The share of natural gas in our energy mix has stagnated around 6% for the past 2-3 years. It peaked during Manmohan Singh's time at around 10%, but since then it has been on a downward slide, and there has been a slight pickup lately. So that kind of leads experts to believe that the grand ambition of taking natural gas share to 15% in 2030 is a very difficult proposition, because the best of the estimates that we have is still well below 15% by 2030.
Rajesh, we leave it there. Thank you so much for joining us with those details. Banking services may get costlier as lenders pass on the impact of a retrospective GST demand from the government. Banks may not only ask customers to pay for free services like checkbooks or ATM cards, but also increase charges across the board. Nikunj Jori reports.
Banks plan to increase charges for the various services that they offer to customers in an effort to recover a retrospective tax demand from tax authorities. This comes after the Prime Minister's office rejected or refused a request of Indian Banks Association to intervene in the contentious issue of taxing free services offered by banks to select customers who maintain a minimum balance account. The IBA representatives met PMO officials this week, and according to a member who was present at the meeting, PMO is keen on recovering this tax demand and has asked individual banks who have received show cause notices from Directorate General of Goods and Services Tax Intelligence to respond to these notices individually. Remember, banks were issued issued show cause notices of tax demand of around 15,000 crore rupees from all banks, and this amount is expected to go up to about 35,000 crore rupees if penalty and interest is included in this amount. Now, banks plan to recover this amount from customers who maintain minimum balance accounts and also those other customers who avail various other services from banks, since it wouldn't be possible for banks to just recover this huge tax liability from minimum balance account holders. IBA, the Indian Banks Association, has already informed the Reserve Bank of India that it plans to recover this tax liability or tax demand from customers. Over to you.
Nikunj, thank you for that. The Supreme Court has directed Reliance Communications to provide corporate guarantee to the government before it's allowed to sell some of its assets to Reliance Jio. The Apex Court has granted some leeway, though, allowing the telecom operator to back the guarantee with property. Arpan Chaturvedi now joins us with more details on this one. Arpan, what does this mean? Does this mean the transfer can happen once this guarantee is provided?
That's right, Harsha. So what the one hurdle that the deal was facing from the government side was that the government had refused to issue a no objection certificate. And the reason the government gave was that the Reliance Communication, the company, owned some spectrum dues to the tune of around 2,960 crores. And the government said that if the bank guarantee is not submitted, it will not issue the no objection certificate for the deal. the case had been going on in the Supreme Court, and today the court has asked the government to issue the no objection certificate once Reliance Communication agrees to deposit a bank guarantee of 1,400 crores. And the time given for them is a 2-day deadline that has been given to Reliance Communication, and post that within 7 days the government will have to issue a no objection certificate for the deal. Apart from that, of course, there's one more hurdle. There's a separate petition filed by Ericsson in which the company Reliance Communication has given an undertaking that their dues also will be settled, and that case now will come up in December in front of the top court again.
Arpan, thank you for that. We now have our eyes on ILNFS. ILNFS bankruptcy may have led to some of its employees being held hostage in Ethiopia. The Indian Foreign Ministry is investigating claims by 7 Indian workers that locals have kept them hostage after the infrastructure giant failed to pay them. Ian Marlowe of Bloomberg News has been tracking the story for us, and he joins us with a few more details. Ian, what exactly is the situation there?
Yeah, so it looks like ILNFS has been failing to pay not just the Indian expatriate employees who are working in Ethiopia, but also the local staff who are executing some road projects in the Horn of Africa country there. And it looks like after failing to pay wages for, I think it seems like several months, and also pension payments, the Ethiopian local staff have actually detained the Indian expatriate workers, and we've been told that the Foreign Ministry and the local Indian Embassy in Addis Ababa are looking into the issue and trying to coordinate between the detained Indian employees and the ILNFS management. We obtained a letter from the employees that was sent to management, which we couldn't, independently verify the claims being made in that letter. But essentially, they were saying they've pleaded with management to send money so that they can pay the local staff. They've tried to tell the local staff that detaining us isn't going to get you the money any faster. But it looks like because of RBI sort of capital controls, ILNFS is saying they can't send the money. Whether they have the money to send, we're not 100% sure either. But it basically looks like they're in a situation now where the Indian employees are being held captive, and the local Ethiopian police are said to basically be supporting the workers. And so you have a situation where the Indian workers are just tweeting at Indian Prime Minister Narendra Modi and Gadkari and others, kind of asking for help. At the moment, it seems like they're in negotiations, but at the moment, it seems like they remain captive.
Absolutely shocking. Ian Marlowe, many thanks indeed for joining us with that story on ILNFS employees. A 2-day protest began in Delhi yesterday as farmers from 5 different states gathered at the Ramlila Maidan. The farmers are demanding the implementation of the Swaminathan Committee report and higher minimum support prices. They also want a 21-day Parliament joint session dedicated to the agrarian crisis.
सबसे पहले तो ये हो कि किसान कर्जे से मुक्त हो, सबसे पहले बात। दूसरी बात है कि किसान के खेत में पानी हो जिसका टैक्स नहीं हो। एक माचिस बनाने वाली कंपनी भी कहती है कि मेरे को इतना लिया है, इतना खर्चा आया, इतना और इतना मुनाफा, उसके बाद इतना रेट है। किसान अगर गेहूं पैदा करता है तो एक क्विंटल गेहूं पैदा करता है तो उसमें कितना पानी लगा, कितना लेबर लगा, कितना ट्रैक्टर लगा, कितना बीज लगा, कितना खाद लगा, कितना दवाई लगा, कितनी मजदूरी लगी, उसके बाद उसका भाव तय होना चाहिए। और तुम यहाँ बंगले में बैठ के कह देते हो कि इसका समर्थन मूल्य है। आप मल्टीनेशनल कंपनियों के लिए तो महीनों मीटिंग कर लेते हो, संसद बुला लेते हो, और कंपनियों को यहाँ बुलाने के लिए संसद चला सकते हो, और किसानों के मुद्दे के लिए बात नहीं कर सकते। तो आपके लिए पास टाइम ही नहीं है क्या? तो आप फिर ये बैठे क्यों हो?
It is coercive. If you as a farmer come to me as the bank, when you want a loan, I will only give you the loan if you sign the insurance policy and immediately deduct the premium from your loan installment. Okay? So I am coercing you to take an insurance policy that you do not want. When and if any compensation comes, I as the bank have the first claim on that compensation because I gave you the loan. Okay? The thing is an entirely anti-farmer. It's a fraud. At the end of the Rafale deal, however corrupt that deal, at the end of the Rafale deal, you get an aircraft. At the end of the Pradhan Mantri's Fasal Bima Yojana, you get hot air.
Let's get more on the story. These farmers are now headed to Parliament to present their demands to the government. Archana Chaudhary from Bloomberg News is on the ground at Jantar Mantar. Archana, what's really going on there? What are they asking for and what's the road ahead?
Harsha, it's quite some crowd that is gathered here. There's thousands and thousands of people, and there's so many. They've come from across states, and what they are asking is very clear two demands. One demand is a farm loan waiver, and the second demand that they're asking for is that they want 1.5 times the compensation for their on their produce prices. So the implementation of the Swaminathan Committee recommendations, and second, a complete clean waiver of their farm loans. And they are demanding that the Parliament come meet for a special session like they did for the GST. That was one of the things that one of the farm leaders very strongly said that if the entire country can come together and all the parliamentarians can come together to celebrate something like a tax, why can't they come together for a special session to discuss what the problems of farmers are, considering that the farm sector is one of the biggest parts of the Indian economy. Harsha.
Do we know if the government is open to meeting them? Is anyone going to be meeting these farmers' representatives? Any details on that front?
Harsha, no, at the moment there is no word from the government whatsoever. But according to the farm leaders who've come here, they have invited leaders from across all political parties. They're expecting the leaders of NCP, Sharad Pawar, to come here. They're expecting Sitaram Yechuri here. They're expecting somebody from the Aam Aadmi Party and from the Congress to come here. So far, we've not seen anybody, but then the farmers have just about got here and there's still speeches going on. So we'll have to wait and watch what happens.
Archana, many thanks indeed for joining us with that update from Jantar Mantar in New Delhi. Agriculture expert Devinder Sharma echoes the demand for higher minimum support price, saying that the new formula adopted by the government leaves no profit for the farmer. A bigger cause for concern is that 94% of farmers in India do not fall under the MSP regime. Listen in.
The MSP the farmers get is the minimum that he invests in agriculture. You know, what he has put on his labor as well as what all he has invested, the inputs that he has spent or the out-of-pocket expenses is all that the farmer gets. Now, the question that we need to ask is, why doesn't the farmer get, things like a house rent allowance, education allowance? Where does the profit come in that picture? Now, what all the government has been able to do this time is not to follow actually the MS Swaminathan's recommendation of MSP plus 50% profit, but it has tinkered with the formula and is providing a kind of a change formula which is actually not giving farmers the rightful income that he still deserves. But having said that, what is important to know is that MSP is given to only 6% farmers in this country. So which means the benefit of MSP plus 50% will also go to those 6% farmers. What about the remaining 94% farmers? If the markets were so good, the farming sector would not have been in the kind of crisis that we see.
Let's move on some international news. US President Donald Trump is keeping the world guessing on how he will approach the trade talks with Chinese President Xi Jinping on Saturday at the G20 summit in Argentina. Trump told reporters before departing for the meeting in Buenos Aires that China talks could go either way.
I think we're very close to doing something with China, but I don't know that I want to do it, because what we have right now is billions and billions of dollars coming into the United States in the form of tariffs or taxes. So I really don't know, but I will tell you that I think China wants to make a deal. I'm open to making a deal, but frankly, I like the deal we have right now.
The meeting with Xi Jinping could determine whether the United States and China can ultimately resolve their differences and lower tariff currently affecting more than half of all trade between the two countries. Or the outcome could be that the two sides will remain locked in a trade war with no end in sight. Bloomberg's Eric Schatzer reports.
Xi Jinping was in Madrid earlier this week. He talked about the global economy being at a crossroads, needing to choose between a more integrated trading relationship or perhaps something else. More in the spirit of the protectionism, perhaps, that we've seen from the United States in the Trump era. Trump, in addition to what you were saying today, well, let me put it this way. The Wall Street Journal reported, and so far as I'm aware, no one has matched this yet, that China and the United States are talking about a cooling off period, during which the United States would hold off on imposing further tariffs on Chinese imports to give China time to come up with some kind of deeper economic response to the U.S. grievance. That would include protection for intellectual property, a lack of forced technology transfer, some questions, resolution of questions around cyber espionage by the Chinese. If, in fact, that's really on the table and that's going to be taken up by Presidents Trump and Xi at their dinner here in Buenos Aires on Saturday night, I need not tell you that's a big deal. We're not getting any further confirmation from the White House or from the American delegation, so impossible to tell you at this point as to whether that is really a live issue here in Argentina.
Eric Schatzer from Buenos Aires in Argentina. Out of time on this show. Thank you so much for joining us today.